Hey everyone, good morning. Hope everybody had a great weekend. Got a couple charts to update on today. Had a nice weekend in Paris, actually. Went to Roland Garros. I'll share a little bit with that briefly in a second, but I wanted to start out with the news here. Pretty incredible. If you've been following my channel, you've probably been following Ukraine. And I'm sure people have seen this, but just in case you haven't, Operation Spiderweb occurred yesterday. Pretty incredible. Ukrainian drones struck 4 separate Russian strategic bomber bases, taking out allegedly, the number is as of now 41 strategic aircraft, including the A-50, 2 950, and 2 22 M3 bombers. I've also heard higher than $2 billion worth of losses for this fleet. This is 1/3 of the bomber fleet, apparently, that launches glide bombs on Ukraine on a regular basis. I've heard as high as $7 billion. I don't know. But obviously, these bases are thousands of miles from Ukraine, from Siberia to Murmansk up north. Pretty incredible. Really, really incredible. If you've seen, you can probably just find it anywhere on Twitter or YouTube, but somehow they got containers with false tops holding drones very, very close to all of these bases, and then all at once swarmed the bombers in the daytime and attacked the fuel tanks. So plenty of places on Twitter, online, where you can find more about it, but just incredible to me. They said it was a year and a half in progress. The fact that they could keep a lid on this, find enough drivers who apparently unknowingly delivered these containers close to the targets, could keep the drones, battery operated long enough, synchronized, satellite synchronized, all the rest. Really quite remarkable to see. Just for a little humor there, always. This is a great account, Darth Putin. Aircraft carriers of the world: USA, UK, France, and Ukraine. Every time that we count them out, they continue to surprise us with more. Here's journalist Ilya Ponomarenko. This is what happens when a proud nation under attack doesn't listen to all those. Ukraine has only 6 months left. You have no cards. Just surrender for peace. Russia can't lose. Surrender or it will get worse, and instead finds ways to fight back and win to survive. Resisting the aggressor works. Standing for what is right works, and helping Ukraine defeat and deter the aggressor works. Could not obviously agree more. Just an incredible day. And then, no casualties, apparently. No military casualties from this operation. Only equipment, war, production, inventory casualties for Russia. And just incredible that they can be so resilient in the face of absolutely everything. I think it's just absolutely heroic. Not to switch too many topics, but I just saw this, which is quite old, actually. But the fact that it is happening every week for Ukrainians shows you that even in the midst of these wonderful, operations and plans and counteroffensive, so to speak, that you have to go back and just look at the reality. And this was already back in 2024, but I just thought, it just kind of hit me. This was a citizen went to fight, and his sister found this video in his iCloud after he had already fallen, after he had already died. This is already from 2022, but I just looked at it when I was searching around, found this, and just shows you that it continues to happen every week for Ukrainian families defending their land. So it's a constant reminder, and surely there is going to be a retaliation from Russia because of this. But it just, again, reminds us how real this war is. And I know a lot of people in this time zone understands this, but perhaps when our American friends wake up, they can be reminded again just how really incredible it is what Ukraine is doing. I want to do a little research project. I'm thinking about it, but I've mentioned it so many times. Is Americans in particular have this very sacrosanct, immaculate conception idea of their nation. When you had, as I've said many times, the French military was backing them and actually fought alongside them. You have the Spanish, the Dutch, providing arms, equipment, embargoes, and money. And then you had Europeans coming over to help the Americans fight for their cause. You had Irish Europeans, German Europeans even, although they fought on both sides. And even black Europeans, which is a very interesting concept that I'm researching a little bit more. So it'll be interesting to put that all together because it's just continues to show how I think we're all united in this fight for freedom. And, I don't talk about it so much, talk about protecting your family's wealth with Bitcoin, but as when things like this happen, this is just incredible. And another idea here is if it's over $2 billion or if it's over $7 billion, whatever the final number turns out to be, and a third of the bombing fleet that is attacking Ukraine, the reward to risk ratio for the Ukrainian military is perhaps this is unparalleled by any prior example in war. As I understand it, it was 150 drones that were released, 150 drones, and only 116 of them actually worked. Right, so you have obviously always a risk there. And there were 5 bases that were targeted, and 4 had successful targets taken down. But billions of dollars for 150 drones is on the Ukrainian side is pretty incredible. And it just goes to show, no matter what the rhetoric is online, when we talk about, Ukraine and Eastern Europeans being free from Russian tyranny, I don't think that anyone can actually sit this out. U.S. is going to learn from this. Russia is certainly going to learn from this. And Ukraine is going to learn from this because no matter how many times you come at them, they're going to still find ways to poke and prod at your defenses. And that's something that everybody's going to have to learn from. And people can poo-poo the idea of war and defense as much as they want, or blame the victim Ukrainians as much as they want. But this is the reality of what's happening. They're defending their territory. So I've said it long enough. I think everybody in the free world should be defending Ukraine in their efforts, and I hope that that goes for our American friends as well. But it's a pretty incredible story coming out yesterday. Going back to America, though, here's one that I have been talking about a little bit recently. So let's just take that off. Let's even take this off. We talk a lot about the 10-year, and after Liberation Day, April 2nd, things didn't exactly go according to Trump's plan in the bond market for the dollar. This is foreign ownership of bonds. Now, unfortunately, this comes out pretty slow. So we just have only through the first quarter, through March. So we do not have Liberation Day on here. I suspect it's going to be down quite a dip. Apparently, it was the Japanese that were signaling that they were selling. Whether they actually did or not, of course, never know. And this is just data at the end of the day that comes from the Treasury, and it comes delayed. So I'm not sure how great is it going to be for everybody here, but just to continue on, $8.7 trillion worth of United States government securities owned by foreigners. Add in bonds, 4.6 trillion. Add in stocks, 17.5 trillion. Okay, so stocks are more than the bond market combined for foreigners. It's not true in general with bonds, but for foreigners invested in the United States markets, stocks are more. 17.5 trillion to 13 trillion roughly. So 30 trillion foreign investment, and then you look at the total securities in the United States per the Federal Reserve. This is about 21%, and down from about 22% in the start of the year. So very curious how this is going to play out. At the end of the day, do I think we're going to have drastic swings here that can show the shock in the market? Probably not, but I think it's something to keep an eye on because, if it's 21% now and then it falls back down to, 17 or 18% like it did just before COVID, that could be interesting because I think COVID blinded a lot of some weakness in the dollar anyway, which we saw with the repo market spike in 2019. It was a little bit less security than people thought. And foreigners were kind of signaling that as well, literally just before COVID erupted. And then everybody fled back to the dollar. So it's interesting. It's interesting. Will we go back to, say, here, 17%? I have no idea. But I think it's interesting to track how foreigners are looking at the dollar markets. Okay. Then if we put that on, let's not go to this one. Let's go to this one. This is the old lifetime debt clock of the U.S. All right, we start with the Federal Reserve here. I've gone through this many times, and if you guys want to talk about it more, we can. But let me take this off. Look, since the global financial crisis, all right, so the holdings of the central bank in dollar terms are this whale down here. This is United States debt, just total federal debt, which means basically total bonds, total publicly owned debt that the government has. Take out the central bank's portion, that's this green area, you just see total debt, and then this is the percentage version of this idea on the right-hand axis. So we have the central bank here. It looks very similar to the actual dollar amount, right? This just shows you in percentage. It's the same concept. Federal Reserve got up to about 28% of total U.S. debt during COVID. And foreigners have fallen in ownership from 34% down to 24%. Okay, and these are the same numbers, by the way, as this green area here. So this is government bonds that foreigners own. The same numbers that would go into this chart, the black line. It's foreign holders of U.S. debt. And again, I'm not sure how things will look. This is always a slow sort of evolving chart, because it's month to month and you can't really get good, you actually can get daily data of the total debt. But as far as the foreign ownership, as far as even the central bank ownership, that's going to be best coming out weekly. This is monthly. The foreign holdings are certainly up than they were, 40 years ago. There's only 10% holdings of U.S. debt from foreigners. But, that's dropped. That's dropped a third in the last 10 years. So curious to see where this goes, right? Because Trump didn't stop this. Uh, it's interesting. You do see more foreigners as a percentage of the total, go up before the Trump term ended. But then because of COVID and there was so much money printing, the foreigners did not keep up with the rest of the debt. And then per here, you can see, let's just look at this again. It's growing, foreign ownership of bonds, but it's not keeping up with the explosion of the debt that occurred. And so again, foreign ownership, as far as that dollar safe haven status, has not been sustaining just in terms of the bonds. If you look back at this chart again, as a percentage of all U.S. assets, yeah, it's actually going up because they're buying bonds, they're buying stocks. All right, so there's an interesting mix there of all the asset classes. It does go up 3-4 percentage points higher than it was at the start of COVID, let's say. But as far as only bonds and only the dollar, the idea of the dollar is mostly surrounding the United States Treasury markets, only government debt, foreigners are down by a third from the start of COVID. They were 32%, started COVID, now they're 24%. And the central bank is down as well. Okay. So the question will always remain, how much lower for longer can the central bank go? Or will Americans have to pick up the slack? And this holdings of Americans, all right, which is the blue line, will that even need to go higher? Back up to, say, perhaps pre-financial crisis levels of 2/3, holding 2/3 of the debt. Again, these are just, I can't exactly predict something in my view. I think it's very hard to predict if you looked even here, except for the fact that they had to buy, this is like bailing out Bear Stearns right here. They were taking more corporate paper, what I'm looking at. Why did this green line go down? Before the global financial crisis, it was the Federal Reserve stepping in to bail out Bear Stearns, a couple of the Wall Street banks. They swapped commercial securities for government securities on their balance sheet, okay, because there were problems in the market. So that was an interesting indicator, I guess, of a crisis, but you couldn't really tell. No one knew it was going to happen right there, that the crisis was going to explode. And certainly if you look, say, here, and if you look at foreigners' holdings or American holdings, it's not like anything, it's not like you can see some big jarring thing that happens. Yes, the Fed did put more corporate bonds on its balance sheet before the crisis, which was an odd thing to do. But everything's just been crazy since then. It's been more and more money printing from the Fed, lightening off the gas, putting on the gas, lightening off the gas again. I think at the end of the day, and this is the safest prediction that any commentator can make, is it just continues to spell more volatility, which continues to open the door for other assets like Bitcoin. And especially if the United States Treasury, now remember, this is basically the entire government's liability side of their balance sheet debt. There is more than this. There's about 10 trillion more, in fact. There's some other loans, other things. Total liabilities are more than this. There's the net present value of Social Security. That's not included here. Okay? It's not included. Medicare, Medicaid, that's not included in this number. But this is the liability side of the United States federal government, this light green shaded area. If they decide to put on the asset side, which does not balance, the government is the only entity which can do that. They didn't, the assets of the government do not balance liabilities. The only thing that the assets could make up with the liabilities is the taxing power of the government. But they hold some land, they hold some gold, and if they decide to hold more Bitcoin, again, that could help the Bitcoin price explode. So that's another analysis that I could show you. But this is the liability side and who holds that debt. You know, for all of the institutions out there or people out there, uh, remember the liability of the United States government is the asset for somebody else. So if when I say holds the debt, central bank holds 17%, which in my opinion is too low. It's too low. It's going to have to come back up. Foreigners, a very low number, relative to the last 15 years, not relative to say the last 40 years. Foreigners were down to 15% here in the start of the 90s. But at 24%, that's relatively low, for the last 15 years worth of institutional memory. That's low. And then the rest are Americans, American citizens, American pension funds, American hedge funds. They make up the difference, that blue line. So these three lines will add to 100%. And you might think that, well, it's better for Americans to hold their own government debt. I would agree. It is better. But on the flip side, it could be the fact that Americans might not want to buy their debt at certain prices. Certainly, if foreigners aren't wanting to buy, then that means Americans would have to buy at presumably lower prices, i.e., higher yields. But lower prices on bonds and higher yields makes it more expensive for the government to service the debt. So you get into this potentially vicious cycle. I'm not saying it's going to happen, but it's potential. So that's a risk. It's a risk. It does seem like if you look at, from this period, this is like, if you think about the old super cycle, the 80-year super cycle, it seems like things could unwind, right? Like we went from back around World War II, 95% of American institutions held government bonds, war bonds to help Americans get into the war. Central bank was only even 5%. Right? It's an important component to think about. Only 5% of outstanding government debt, and then those things just converged for 70 years, something like 70 years, and then got really crazy in the last 10, 15 years. Now the question would be, would they go back the other way? Would the only way to restore faith and confidence in the markets and the dollar would be for Americans to start buying it again, albeit at perhaps lower prices? No one knows, but it might happen. This is the key chart. So the stock market, which is going up, and the bond market, or the 10-year, which is really the premier benchmark of bond yields, which is also going up. All right. Besant was most worried about this during Liberation Day when the markets were going down, but bonds yields were going up. Bond prices were going down as well. So usually you have that risk-off trade where people get out of the stock markets, they get back into the bond markets for safety. That did not happen here. And the markets recovered, but yields still stayed high, and they are high. 4.4%. And even the short-term Fed target is 4.25. Whereas if you can see historically, you could be many basis points. This is 300 basis points lower short-term rates versus long-term. Okay. And when you have an inversion, by the way, usually there's a crisis. When people demand short-term rates higher than long-term, right? So there was a crisis here. And obviously we had that here for the COVID crisis. at least on this duration, it's back normal, right? The yield curve is not inverted here. I think it is inverted on the 2-year, but it's another story. Anyway, point is, we're not out of the woods yet, and borrowing costs are pretty high historically. If you look at this chart, borrowing costs at 4.4 or 4 2/5, they are pretty high compared to since the global financial crisis. Again, this is all just building our case for why it could be good to have some Bitcoin for rainy days. So we're back to the old power curve. Update on that as of yesterday, actually. June 1st. We're still above the curve. We're down as well today as of this recording. We're about this number, actually. 105,300 at the moment. So as of today, we're a little bit lower than this price. But this price is still above the power curve, so it's a good thing. I noticed a lot of people declaring tops because of just the crazy memes and tweets that were coming out of Bitcoin 2025, which is funny. And I mean, it does seem wild, the interest in Bitcoin these days, but I'm not gonna complain if Bitcoin goes to hyper Bitcoinization. I'm also not gonna complain if it goes right along this power curve. That would be a nice way to grow. I don't think that's gonna happen though, based on the past, and it might take a longer time to shoot up. But based on the past, we had, if you just look at this rainbow chart of the highest explosions in Bitcoin's price, happened in 2011, 2013 twice, 2017 once, and 2021 twice. Although the 2021 twice was an odd one because it was in dollar amount, it was about the same, 60 grand, 65 grand, even up to 70 grand, right? Probably intraday. But 65,000 twice in 2021. But that initial burst in 2021, where you can really see it was extending above its skis, so to speak, happened in the spring. So if we follow the 4-year cycle, we're already beyond the spring, obviously, of this cycle, 2025, and we're just right on trend. But no, I still do not think that this just follows trend forever now. I think we continue to boom up and then crash down, as Bitcoin likes to do. So that's about all I had, guys. If anybody wants to look at another chart, let me know. Just want to do a little update there, and as well, on top of this, just incredible resilience from the Ukrainian people yesterday. The taco trade's also pretty funny. That was coming out late last week. Did we talk about that? No, we did talk about that. Showed a couple tweets of that. That's remains quite good. Trump was pretty angry about that question being asked, but if this is how it looks, where there's just belligerence on the front end and saying very high numbers like 140% tariffs, and then you negotiate against yourself, taking it down to 80%, as he's done with China, or with about every single possible thing you could offer Putin. Putin is not even asking for anything. And first of all, Trump is giving him all sorts of things that Putin doesn't deserve. Perhaps this name is fitting. Taco Trump. We'll see. We'll see. I still have hope for Trump in very cynical, morally bankrupt ways. and maybe someone can get to him that's on the side of light, not on the side of darkness. But yeah, he's. Good morning, Gio. Yeah, it's unbelievable. There's going to be so many things written about this war, obviously, in the halls of military study, but it seems that this was one of the most disproportional strikes ever. And Ukraine is just reinventing the wheel every day. So no one can really sit back here and just sort of relax or think that it's not their war or that they don't have a stake in this. And again, I don't say that as a willy-nilly like I want to fight myself. Ukrainians are asking just for help, and they're fighting themselves. So I know I sound like a broken record sometimes too with this, but I don't want to be one of these people that tries to just lecture people like you need this, you need that. There are great Ukraine channels for that, but just telling you my thoughts. Good morning, sir. So I was in Paris this weekend with my wife. It was a great time. We actually bought tickets for the Saturday night third round match of Roland Garros months ago, and luckily this man was playing, so that was awesome. Not the first time we've seen him actually, but against a fellow Balkan Croatian, uh, Musalic, I guess his name was, right? Who he had trained with, but he did a pretty swift defeating one in straight sets. It was cool. It was cool to be there. And also the Paris Saint Germain Champions League match was right down the street. So it took us a long time to get back to the old hotel. I thought Paris was going to burn. I didn't even follow the news. Maybe it did burn, but people were happy in Paris. Yeah, he really is. I have a lot of respect for him. He's always positive. He's always kind. He's taking out, walking the kids out to the court and just sort of giving them a little bit of attention, even though he's got this big match. Or I always see him really just show a lot of human side and emotion, and just very kind to everyone. So yeah, it's a little bit around the horn for what I did over the weekend. Still reading this book. This is big. This is very good. Still working through it. It's kind of the anti-Kissinger, or I don't want to say anti because Kissinger's an interesting fellow in itself. I guess he's obviously controversial with some of his foreign policy, but Kissinger was under Nixon Republican administration, and then Zbigniew came in under a Democrat Ford administration, and was certainly less well known or less pomp and circumstance than Kissinger. And he was the director of national security, he wasn't Secretary of State, but the just staunch supporter of capitalism and anti-Soviet communist propaganda. It's pretty incredible that this guy was always touting for like his whole life. And he just he was a very straight-laced guy. He was not Kissinger was more diplomatic. Kissinger was more soft around the edges. This guy was not. But he's Polish and he's fighting for Poland to become free at the same time as he's trying to lead America's security. And he was right. He was right. So anyway, yeah, it's incredible some of the videos you can see from Ukrainian fighters and families throughout the years. But it's like haunting. So anyway, back to if anybody wants to look at any of the charts, I got some, and I'm very curious though what's going to happen here. If you look at this chart and you see foreign ownership falling, central bank ownership even falling, that portends higher interest rates. Okay. And then, of course, Trump's going to want lower interest rates, so the Fed's going to have to turn around and print more. But the question will always be how much is left in the tank, and will foreigners as well buy those bonds at lower interest rates in the future? It's a very slow-moving chart. It doesn't really tell us much as far as where things could go. And if you were, say, here in 2011, moving up into not even to the third QE, you'd have so many economists. And again, I was really cutting my financial teeth right around this period. Buying gold, and everybody said the world was ending, and it didn't. But who knows? Maybe this time it might. Not, I don't mean it literally ending, but I mean the really some financial pain for the dollar might come. And of course, Peter Schiff was poo-pooing Bitcoin all the way here and completely wrong all the way here, but Bitcoin outperformed gold by like 1,000,000%. I'm not sure I actually know the premise of the question, but if it means that if it's the other way around where people hear news and then they try to look to the charts, I don't agree with that. But if it's just looking at the charts themselves, I think there's more validity there, right? It may not be easy to interpret and they may not be instantaneous, but we can sort of understand the narrative here, which is just like more money printing and now less foreign ownership. That's probably not a good thing for the dollar. Even if it's less money printing in the last couple years, it could turn around. So from that side, to me, that's the story. Yes, we can kind of shoehorn it into like the news with Liberation Day and everything, but I certainly am not someone who would try to find like meaning in every chart because of the news. I don't think that's a smart way to do things. It is funny how the news, you can argue that the news creates charts, right? I mean, like here, for example, when we were falling here, this was FTX bankrupting. Everybody figured out that Sam Bankman-Fried was Sam Bankrupt fraud, as Peter McCormick was saying. Yeah, it's possible that this just decimation in the price here was specifically because of events, but that was not the reason that it was going down here. The reason I think it was going down here was just the typical overextension of the trend. And we can look at many charts there, right? Like, and I need to get more now. Like addresses and transactions were becoming exhausted. It all just sort of compounds, right? From being really, really good. And the same thing happened in 2017. Same thing happened in 2014. Results were really, really good here. Still dead. Let's go here. Results were really, really good here. And then it took a long time. And then this puke, I can't even remember what was the catalyst here, but there were some news events which probably caused it to puke down these days in November 2018. Again, notice how it was November. It still didn't change the overall trend that we were just going back down from an explosion way above the mean. So I don't think I'm really answering your question, but I do not agree with Bloomberg or CNBC style. Like, we see the price of oil pop $3 today. Why is that? You know, that stuff's obviously just garbage and voodoo. And it's beautiful too with Bitcoin because Bitcoin was such a retail driven phenomenon. You know, every time they were putting it on Bloomberg here, the Bloomberg people like what's his name? That old guy. There's so many people that were just poo-pooing it on Bloomberg. And they were just not even paying attention here. So they had no idea about the market fundamentals or any of the debates that had been going on or how Segwit 2X was, you know, failed just a month before the high and all the tension that was happening here and the debates that were happening every day. So I guess we're never making news on this channel, right? But I think in light of the news, staying strong and steadfast, stoicism, as Steven says from Money or Debt. I think you just got to keep reminding yourself. I mean, that's what I have to do, right? Like, trust me, I wish I had played this time better and also this time better as far as being able to accumulate more coins on the back end. Is it going to be exactly the same? Probably not. It's probably going to throw all of us for a loop. But to me, it would be a miracle if it just started like somehow bouncing around this trend now forever. There is a lot of fluff, a lot of scams out there. I'm sure 90% of the announcements at like a Bitcoin conference, you know, just end up being fluff announcements and nothing really matters for the underlying fundamentals of Bitcoin. But you know, that's how it goes, right? People want to drive consumers to their platforms or to their devices. But I'm not a big news guy for like why did the price pump $5 this morning? But people do like that. Those narratives are created every day while the super cycles occur. This is the S&P on log scale. You know, if you back out long enough, you're always in profit, right? Even though you can have decades of like flat performance or down performance. Of course, you're always in profit if you hang on long enough. But since I am not a swing trader or a day trader, it's probably the probably the best method is to look at the deviations from this trend, which are clearly high here, they're clearly high here. You know, if you drew a straight line through there and did the multiple analysis like I did with Bitcoin, you know, it's clearly overextended in these two peaks, and you clearly wanted to buy when S&P got down to 666 in March 2009 here. You know, the trend line's going to cut right through this line on both examples. But are we going to zero in the S&P 500? No. Is everything a scam but Bitcoin? No. I mean, is it true? Well, remember, I don't call it power law. I call it power curve. Because power law seems to trigger people. They think that you're saying it's like automatic going to be this way, which I've never said that. I mean, there's exponential, there's power, there's linear, logarithmic, different regression trend lines. So no power, people. Yeah. Nobody was talking about the power curve. If you put this on linear, so here's another way to look at it. So we got linear, and I know that linear is better when you can zoom in. So I'll zoom in. And let's take off the 100th percentile. Okay. So here's the actual. And these are absolutely just, you know, crazy trends. This also helps to see how crazy some of the trends can be, right? So this is only the top 10th percentile. If you zoomed out and you looked at this future curve now on exponential, it would be way faster, right? And remember, I've shown you this, like Bitcoin getting to the billions of dollars by 2030 or whatever. So actually, the way that this power curve looks here, even though it looks pretty fast, it's slower than exponential. So it's better. It's better to even look, even if you don't believe in the trend line itself. I presume people would believe that something conservative is a better way to talk about the future than something that's aggressive or going 100x or hyper Bitcoinizations. So it's another reason why I like the power curve. Yeah. Also, we have very polite people on this channel, which I like, but yeah, it's not easy. Some people think exponential growth is the only type of growth, and that's that. I wish I had more one-liners for that as well, but you know, just think of Peter Schiff talking, and that's like there's someone who, you know, just thought exponential gold growth was the way to paradise, and clearly it's not. That's funny. Yeah, years ago there were many young people partying with Ferraris or Lambos, the degen generation. Now many over 30 in elegant suits. I like that. What was the best? Did you go, G, or did you just watch it? Tell us the best things to watch, best presentations. I mean, these were great. These were great days for sure. I mean, when you're going from, let's just go back from here. You had guys like Fluffy Pony, remember him from Monero? I don't know if he was having legal troubles. I don't know if he's still in those troubles or not, but he would have this theory that he would, buy $100 of every shitcoin, and he was just a true hacker, and he was doing it, and it probably worked out for him because there were so many shitcoins that were just mooning during this run. But even for the steadfast, stoic Bitcoiner, it's not long. All right, you only had to wait 5 years from $5 Bitcoin to $20,000 Bitcoin. Only 5 years. So yeah, if you're a young Turk, as I was as well, but as we've talked about, not as smart playing at $5 Bitcoin. But if you're a young Turk playing at $5, and next thing you know, it's $20,000. Yeah, she's really good. Really smart. Great research. I need to do more other markets. I know. I want to compare. I've been showing this S&P 500 a lot in the 10-year a lot, but obviously we have other big markets, right? Like some of the boomed and gilt markets of Europe. Compare that with some of the European stock markets. But it's just such a huge proportion of wealth is in the United States. It just seems like a good way to show it. And still, it's even though it may be that this number gets a little bit smaller, relatively smaller compared to the debt of the United States. Still a lot of people and funds and foreigners investing into U.S. markets like they are here in stocks and corporate bonds. So, it's hard to get a sound conclusion. Like if I was reading a newsletter from 15 years ago, they would say, oh, look, foreign investment is plummeting. The dollar's going to zero. Buy gold. I know that was only 5 years ago, but whatever. If someone was smart enough in a newsletter to catch this, which maybe they weren't even, but the trend can go on a lot longer than you can have capital, to use that old Keynes saying. Yeah, broken money. I haven't actually read it cover to cover, but I've skimmed it, and some very valuable insights in there. We're very good. We're very lucky for Bitcoin, guys. We're very lucky. I mean, if you think about some of these books as well, you can tell some great stories of what happened during the Civil War times and like an explosion of debt, or again, people will romanticize Andrew Jackson killing the second bank of the United States and taking the debt to zero, but also overlooking the fact that he wasn't exactly friendly to Native Americans. But there's always great stories for books and historical sort of vignettes about the money supply or the financial system. but it's very difficult to predict a crisis. This is another cool thing, right? Is that the US economy was growing at a pretty fast clip here, some of the fastest ever that happened after the Civil War, and the debt was going down from the Civil War. It did go back up here, but during the massive industrial revolution that was occurring first in Britain, then in America, we didn't have to have debt. This is another good example. But at the end of the day, you still don't know when the crisis is going to occur, and there's tons of them, right? So it's just what I mean when I say we're very lucky to have Bitcoin, because I think it allows you to not have to follow all these charts and make these charts like I do, but just kind of use that as mental armor to protect yourself against very volatile times. Let me see if I can pull up the asset side. I don't think it's going to be ready for you, but I'll check. Oops. Yeah, so this is not bad. It's not fully updated. I'm 2 months behind here, but um, this is another good one. So same thing, long-term debt. Right, got it for the entire United States. We're up to 36 trillion now. It's still around this number, 36.2 trillion. And the gold proportion of the debt, this is marked to market. This is marked to market. Yeah, it's marked to market because it's flying up here. 2% of the government's debt. So, 700, 800 billion now with the rising gold price. It used to be over 50% in World War One and World War Two. And then obviously the gold, you see here, the gold falls as more money, as more debt is put into the system. But then you look down here and we got Bitcoin. Super small, not even, well, a half of 1%, basically. No, sorry, not even a tenth of 1%. Not even a tenth of 1% of the government debt is Bitcoin, right? So 50 billion roughly now. This is 2 months on. It's a bit higher with the price and stuff. So whatever, maybe it's 0.1%, maybe it's 0.2%. But at least 10 times smaller than the amount of gold that the government has. So it's just, I can't think of a better asymmetric trade where you have an asset that is so awesome. People still denigrate it. They don't understand it. They don't know how it works. It can be traded anywhere. It's not just limited to the United States or to the United States Federal Reserve or certain major market making banks like Bank of America or JP Morgan or Chase, or whatever, Wells Fargo. This is going to be huge. Even if it gets to 2%, that will obviously be an explosion of price, right? If it gets to 2% of the national debt. it's going to be gigantic. And I'm still one of these people that, uh, even though like obviously this is a case that Saylor would make, like this is a Michael Saylor case for Bitcoin because he's a legacy institutional uh, stock market CEO. He's a mainstream guy. Obviously, it's going to help everybody with price. I would still personally want more people to not want the government to buy it. I would want them to just do multi-sig on your own, run your own node, all the rest. I like those old recommendations for holding Bitcoin. But the bottom line is people can't people can't do all of it themselves. People are busy. They don't have time to figure out how to run your node or uh, do multi-sig or whatever. So just like with the old free banking days, you're going to have custodied solutions by main players. But it's still a great way to see how much the price can explode because, or how much interest there could possibly be. Because if they got 2% of gold, you'll be sure they're going to have 2% of Bitcoin eventually. Yeah. It's hard to know the exact. So it's a cash flow item when you talk about debt, right? So the government has to choose. Technically, when you run this green area, the debt, it goes up for as long as the deficit increases. But I guess technically, if you want to pay down the debt, you have to make a bill from Congress. So usually it just automatically goes up because the government doesn't collect enough in taxes. Uh, but I'm curious to see. It has flattened out officially, right? So it was. I'm not a huge fan of the chaos from the Doge team, but it has at least flattened out around 36 trillion. Uh, we'll see how it looks at the end of the year, but um, technically they would need to, if there were enough reason to not do a treasury auction to increase the debt, they could take some excess taxes and pay down the debt. But I have a hard time, like you say, Gio, believing that that's going to happen. But yeah, this is another way to look at it. So this is the debt side. This is the liability side of the debt and who owns that debt. And then this is the asset side of the government itself, which does hold gold. There is gold on the assets of the United States Treasury. Uh, it's actually in the Federal Reserve, which is another complicated thing, obviously, because the Federal Reserve only owns a portion of the debt. But at the end of the day, the Federal Reserve's assets will back the Treasury's assets, even though they say they're independent. So, you know, there is some gold here that's on the Treasury's balance sheet, some that's on the Fed's. I'm adding them together. And then, of course, the government Bitcoin holdings are the very, very small figure right here. And there you can see with the price rise, this jumps 0.05% of the debt is BTC. Maybe to 0.1 now with the price rise and probably some more accumulation. Well, been about an hour, guys. Just wanted to give you these updates. Let me know. Keep letting me know if you want to see different things. I got to get the monetary base update for this quarter. I'm late on it. It's already the start of the last month of the quarter, Q2, and I got to get Q1 out. But I will in the next couple weeks, so we can talk about that. I'll also be at BTC Prague, if anybody's going to be there, talking. Do some talks on the power curve. And a couple other conferences this summer as well. So, with that, I think I'll sign off. Thank you guys for watching. Slava Ukraine. And I hope you guys have a great week. Take care.